There's 5 stocks that I want to cover in this video. I made a warning about the market and the dangers of some of the valuations. We've seen some tariff concerns from Trump, but with the stock market having a pullback, there are opportunities in the market, and I want to cover 5 stocks. So let's not waste any time. Let's jump right into it. The first stock is going to be NBIS. This stock is up 38% in the last 1 month, and if you guys have seen the video and if you've been subscribed to the channel, you know when we got into NBIS, we got in a lot earlier, and this has been a very profitable play for me and my community. So I'm very proud, and I hope that I built a lot of trust with you guys by being early on some of these stocks that are doing extremely well. Now, the reason why I like NBIS is because they clinched an $18 billion cloud computing deal with none other than technology giant Microsoft. So when a company like NBIS has a huge contract that's stable, I like that. I like that a lot. And their position is strengthening in the rapidly growing demand from other AI firms. So its major business is supplying AI infrastructure and cloud services, especially large GPU clusters optimized for tasks like model training and inference. And that is a very high demand right now. And what they actually do is a couple of things, 4 things, and these are the reasons that I'm invested. First is high performance computing, or HPC. They created massive clusters of GPUs, special processors, good at AI math. Very important, very high demand right now. These clusters are used for things like training large language models, or LLMs, and running inference. So whenever the AI answers questions or generates text/images. So that's the first. Second is cloud services for AI. So instead of every company buying its own expensive supercomputer, Nebius rents out their computing power through the cloud. Very interesting business model, and is very lucrative. 3, full stack platform. So they don't give raw chips. They actually offer storage, network, developer tools, and management software. So customers can build and scale AI projects a lot faster. And then, of course, the Microsoft relationship is they teamed up with the big players like Microsoft, and they make infrastructure available inside existing cloud platforms. So I made a video on this company recently, but I think there's a lot of strengths like networking plus their software stack just being super powerful. They do rely on NVIDIA's CUDA and AI software ecosystem. And most modern AI frameworks like PyTorch or TensorFlow are optimized for NVIDIA CUDA, so Nebius's customers can run their models very smoothly. Their relationships with other hyperscalers like AWS, Microsoft Azure, Google Cloud, Oracle, just a whole list. The list is just goes on and on helping hyperscalers. That's where the money's at right now, guys. That's why I'm pointing this company out right here. And this is like one of the first plays that I think is really smart, as it has continued to make a lot of money. So Uncle Henry been right on that one. So all right, let's not pat my back too much. Let's focus on what we can make in the future and how we can make smart investments. The second stock is going to be Archer, ACHR. So also, I've been very spot on with this company and the research that I've been doing on this company. Essentially, they have amazing partnerships. Recently, they have another strong partnership, which can, very strong Stellantis partnership. I really like to see more relationships going under Archer's belt, because it's kind of like that company that's just going to make a lot of money in the future. I can kind of compare it similar to a Palantir. Once it has those relationships, those contracts are going to be big and continuous recurring contracts. So when I look at Archer, it has had a massive rise. I've been in the stock for a long time now, so I've been recommending it for a time. And also, guys, keep in mind, I'm not a financial advisor. I'm just a guy on the internet that's doing research. I've been trading for a long time. I worked at Goldman Sachs. I have a lot of experience, but still, I'm not a professional, right? So do your research. Please be careful. This is a market where, goodness, a lot of money can be made, but also a lot of money can be lost if you don't know what you're doing, right? So position sizing, risk management. Please be aware that that's very important. Now, in general, Archer is good also because the eVTOL market is growing. So eVTOL is the electrical vertical takeoff and landing industry, and it is projected to continue to grow 30 to 40% annually for the next 4 to 5 years. So for the next 4 to 5 years, I think that this company can be a multi-bagger return. And for me, that's very attractive, right? If I can put in a small amount of capital and see that capital really grow, that's great, right? So that's what I'm looking for. This company doesn't have a whole lot of cash flow, so you have to be aware that it can be very hard to predict Archer, but they're investing a lot into R&D. They recently had some dilution, which caused the stock to go down, but not a concern at all, because the most important thing is relationships. It's who you know in this world that helps you, and a company that has a good relationship with hyperscalers, That's what you want to be invested in. So when I see them raising debt, it's not bad debt. It is what it is. It's fine. Also, if you look at their management's really strong, has good experience. So that's that. Let's go into the third stock, which is Shopify. This stock did get crushed on Friday. We obviously have seen some kind of concerns. I would even call manipulation. Did you guys see, like, there was a person, who knows, in crypto that ended up shorting a whole bunch of crypto the exact minute before Trump released 100% tariff tweet that's going for, China resources and stuff. So there's a whole lot of, it's really criminal stuff. There's a whole lot of manipulation going on in the market. And, it sucks for the everyday investor, like retail investors like you and I. It kind of holds back and lets the rich get a lot richer. But hey, we got to work with what we got. And I want to make obvious plays that are fairly safe, right? So when I look at a company like Shopify, it got hit on Friday. It got hit along with the rest of the market because of the Trump tweet. But 6 months, it's up a lot. 1 month, it's still up, and it's off its peak right here. The peak was at 166. Now we're at 151. I think this is a pretty good entry for me. I'm looking at entry because Shopify, it's really the operating system for e-commerce growth. E-commerce is really huge. Of course, people spend a lot of time on the internet, and the fifth stock I'm going to cover is going to also benefit from the internet and e-commerce and all that good stuff. But social media is really just one big funnel, and Shopify is really benefiting because it's at the bottom of that funnel. There's a lot of attention, right? Attention is the new currency in the world, and then with that attention, people are doing selling products and webinars and physical products and services. And social media and Shopify is benefiting from all that because Shopify isn't really just the website builder, it's the backbone of millions of online businesses. So over the past 10 years, the stock has skyrocketed like 3,000+%, and that's because it is benefiting from all the online transactions. So the global e-commerce market, it's already worth like $6 to $7 trillion. It was like $6.5 trillion based on my research. And in the US, just 16% of retail happens online. And that number is growing. More people are going to do online for multitude of reasons, right? It's just convenient. And certainly it's just convenient, okay, in many ways. So I think we'd all agree that online shopping is probably going to increase. Don't know how much, but e-commerce is going to increase and Shopify is going to make a lot more money. And look at last quarter alone, Shopify gross merchandise volume, that's the total dollar value of all their sales, jumped 23% year over year to $75 billion. So that's really huge. And I think that investors can benefit from owning platforms. I've talked about platform businesses, Uber, Airbnb, and many other companies that are like more the platform. Like they just take a cut commission. SoFi is going into that right now. Robinhood has been that for a very long time, right? Other stocks that I cover on this channel. And what I think Shopify will really kind of delight investors with is their continued growth in their recurring revenue model. So they have subscription, they have recurring revenue model where you just sign up and then you pay monthly fees, right? And they are the backbone. So when I look at social media, and our fifth stock is also social media space, but when I look at Instagram, Facebook, TikTok, and the evolution of content and how crazy addictive it is. I had a 6.5 hour drive and I was on TikTok and all kinds of content for a long time. So it's kind of like a sickness. I don't want to be on it, but there's not much else to do. It's so engaging, and a lot of money is going to be spent on the internet. So I'm telling you, Shopify is an interesting stock for me that I believe will have above average results and beat the S&P 500, in my opinion. And I'm looking forward to their earnings in about a month from now. So market cap is just under $200 billion. I think that tariffs are not really a huge issue for Shopify in the long term, right? People are still going to want to buy their stuff. All right, let's go into SoFi. SoFi has been very strong, so it didn't really get affected that much. Yeah, it pulled back, but honestly, if we actually go into the technical chart, I want to cover technicals a little bit. I know there's a lot of other YouTubers talking about technicals, and I actually do cover technicals a good amount in my community. I cover Bollinger Band, I cover moving average, I cover RSI. I just keep it really, really simple. I don't use too many indicators typically. For me, Bollinger Band is my favorite, and any other option YouTuber that covers Bollinger Band has been my student. I'm telling you, I watch other channels. I have taught them because Bollinger Band is like to me, I just love it. I love it so much. I won't go on a rant on why I love Bollinger Band too much, but essentially, to keep it short, Bollinger Band gives me a really good idea of support and resistance, and support and resistance is really tough to really figure out, but Bollinger Band in my opinion, is the best indicator for figuring out support and resistance. So when I look at the moving average for SoFi, it is trending up. And right now, as we get towards the bottom of the Bollinger Band and as we get towards the moving average, I think this stock is pretty cheap. In my opinion, it's cheap. It's not an expensive stock. I think that this company can easily be $30 to $40 per share in like 12 to 24 months. Very, very possible. It is down a good amount, but that is a buying opportunity, in my opinion. SoFi has their act together. They are phenomenal at a lot of pieces of their business, specifically engaging with their customers. When I look at their automated re-engagement emails, and I signed up to some SoFi stuff. I'm not a SoFi customer myself, but I've kind of like signed up for some things just to check out their email marketing. I have a friend that works at SoFi as well. So I really like what they're doing with their email automation, what they're doing with their email campaigns. They know how to engage. And SoFi stock, it has dropped fairly significantly in the past. And every single time it was a buying opportunity. So for me, if I'm going to be direct and honest, my shortest conclusion of SoFi is it's a really strong stock because it's benefiting from blockchain. It's going into more blockchain. It's going into private markets, and it's going into options. So expansion into option trading is really powerful. They just started level 1. So like level 1 is just basically like selling puts and covered calls, cash secured puts to be specific. And I think that's going to be great because they're just going to attract more customers, deeper funnel into just having a great relationship with SoFi. So my investment philosophy is I'm trying to buy a business, which is what you're doing when you're investing in a stock. I hope you didn't forget, like when you invest in a stock, you are investing in a business, right? So I like to be invested in businesses that have great, strong future cash flows. I think option trading is going to make a lot of money for SoFi. Looking at the blockchain, SoFi just launched blockchain-based international remittance service in partnership with Lightspark, where they basically have USD to Bitcoin for cross-border transfers. And yeah, I think that's going to be really huge. I think crypto is going to be really, really massive. It's already massive. It's going to be even more. And then last but not least is like just their involvement in private market fund access to just huge companies, like something like an OpenAI or a SpaceX. I think short term, we're going to see SoFi do pretty well. And I don't like to predict short term because nobody can. I think it's pointless to try to predict the short term. But if I had to make a guess, I think SoFi, we're going to see $30 fairly soon, in my opinion, right? Now, just really good customer acquisition. And yeah, let's move on from SoFi so we don't make this video too long. My fifth and last stock is Meta. So I have a Meta position myself in my Discord community. I decided to start dollar cost averaging into Meta. The recent fall hasn't really done anything for me. I'm exactly at break even on Meta. I have a $4 gain on a $17,000 position myself, right? Small position. I started dollar cost averaging. I also have another position on Meta. I am looking to get assigned Meta. I personally would like to have Meta at 700. That's where I believe the value of Meta is really good. And the reasons why I like Meta is because they just have like a lot of AI leadership and infrastructure. So they built out the largest AI training infrastructure in the world, like literally in the world, tens of thousands of NVIDIA H100 chips, powering its recommendation algorithms, ad targeting, and new products like AI chatbots, and creative tools for Instagram and WhatsApp. Really powerful stuff, and long-term, this gives Meta a structural advantage in personalized advertising and social media engagement, similar to how Google leveraged AI for search dominance. So Meta, just super strong on infrastructure, amazing. They already spent the money. So they have less future CapEx, capital expenditure costs, right? Now, they also have a lot of cash flow, and what they're using that cash flow for is buyback. So Meta is a cash machine, generating like 15 billion in quarterly free cash flow. Literally the best business. Like Mark Zuckerberg knows what he's doing. Like the man knows how to get attention and get a lot of money from advertisers. So attention is money, as you know. And basically Meta has aggressively used their cash to buy back shares. And this is something that's basically financial engineering to create scarcity. The more shares they buy back, the less shares are outstanding. Well, supply and demand is economics 101. This is stuff that I learned like a decade ago, my first economics 101 class, right? So yeah, scarcity creates demand. And that's what Meta is doing by buying back shares. Now, last but not least, like two last points, then I'll let you go, respect your time. Dominant ecosystem, Facebook, Instagram, and WhatsApp is a powerhouse, man. It's like, man, bicep over tricep all day. I say that to just have a good time. Take it easy. we're not here just to make money. We're here to have a good time too, right? So Meta owns 3 of the top 5 most used apps on Earth. Crazy. With over 3.2 billion daily active users across its platform, this global reach makes it almost impossible to displace. I think Telegram, if they can own it, that would be great. But, Telegram not owned by Meta, but each product that they have, super powerful: Reels, Marketplace, Threads, WhatsApp Business, continues to evolve and monetize in new ways, especially WhatsApp, which is still early in ad and business messaging monetization. That's the biggest question for Meta. Can they really monetize it? I don't know. I'm not the most bullish on WhatsApp specifically. I'm more bullish on Facebook and Instagram. I think that Telegram is better than WhatsApp. I use Telegram personally. When I do my one-on-one coaching, my students have access to me, and I'm sending voice notes and images, pictures, whatever they need, just to focus on risk management, diversification, scaling strategies, etc. Right? So I like Telegram. But anyways, I think Meta is going to be super strong. And what I like the most about it is its valuation. Its forward PE is in the low 20s. So yeah, I think it's a no-brainer stock. If you want more research, I highly recommend that, especially in this time of some turbulence and turmoil in the market with some volatility, schedule a free call, schedule a consultation to learn about how I can help you. Right now, I am in one spot. As you can see my videos, not traveling anymore. I'm in one spot, and I just want to provide the best service, help investors make as much money as possible, protect themselves, hedge, diversify, all the things that you need to achieve, your goals, your dreams. So I'm here for you if you need me. Make sure to subscribe, and I'll catch you in the next one.